Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Well in yourself, Deon.
I'm good. So, episode 39. It's been an interesting last 2 weeks. We unfortunately were not able to do a podcast last week due to other commitments, but what a hell of a week.
Yeah, we since the beginning of the year we've been talking about this mystical $4,000 for an ounce of gold, and well, that's come and gone.
Yeah, and what's scary is it broke the $4,000 mark, and as always expected, when you break these new highs, there's a kind of a profit taking. So there was a drop under 4,000 into the high 3,900s, and it remained there very briefly, and then just went back up to 4,000, and now is marching closer to 4,100.
Yeah, I think actually what makes this more significant is the fact that it was $4,000. That is a significant milestone. It's a psychological milestone that has been achieved, and as you said, there's always profit taking when we get these record high numbers, especially something like this. And the impact of that has been, I would say, a lot less subdued than I would have expected.
Yeah, it's quite interesting. I mean, we look at the beginning of this year when we were doing forecasting, and I always think of this, and even some of the top analysts, no one had 4,000 on their radar. There were a few outlanders who were calling $10,000 an ounce by the end of the decade. But a lot of your mainstream guys were talking about 3,000, maybe just over 3,000, but it almost recovering under 3,000 by year end. We've seen a complete different story.
Yeah, I mean, yeah, as you said, I think they've revised their predictions about three or four times more this year already. And it was 3,100, then it was 3,500, then it was 3,800. Now, I mean, I don't even know. I don't think they know exactly where to put it right now.
Well, the interesting thing here is, we got to look at a couple of factors. That if you look at the technicals for bullion, and we're going to chat about silver also, but we look at gold specifically, it's still showing a very much of an upward movement, and there's no slowing down. A couple of factors to that is it's now becoming a trade war between China and the US that's really developing. We also look at the weak global growth across the board. All economies are quite slow right now, and hence the move to safe haven assets such as gold. We're also looking at the escalating political tension. That has remained a key or cornerstone of this rally in gold from literally 18, nearly 24 months ago.
Yeah, and I think one of the things that's also sort of bolstering this is central banks buying gold, and the tons and tons of this stuff, to be honest. And another thing is the fact that there's talks again of a new BRICS currency. Now, we've seen a few of those in the past. Nothing has ever come of it, not yet at least. But somehow there's something different about it this time that I think has some people worried about the actual value and the strength of the US dollar. I mean, we've seen that sort of erode a little bit over the past year. And I mean, what was it? What I was reading earlier is that gold is up 50%, while the US dollar basically, or US equities, I can't remember exactly which it was, but it's basically fallen by 10%.
Yeah, the US dollar.
Yeah, the value of the US dollar has basically fallen by 10% versus gold that's up 50%. And as I said, it's because central banks are buying gold. They used to hold 75-80% of their assets in US dollars. That's gone down to about 53% now. And across the globe, we see them all buying into gold. Major financial institutions are buying gold. I think in the past, just before this whole new trade war with China ignited, they've bought, I think, 1,003. Wall Street has bought 1,300 tons
Ounce,
of.
yeah, or
It was it tons or kilos? I can't remember, but it's a lot. I think it was 1,300 kilos of gold.
yes. Well, actually, it was 1,300 tons that Wall Street had procured with of gold. So it's interesting, and again, what it does show is that the dollar is not the reserve currency or what it was globally as it has been. And if we look at over the last 5 years, and it's been very clear, the formation of BRICS, that there's definitely a move away from destabilizing, firstly destabilizing the dollar, but a move away from the dollar as that reserve currency and a hedge that most countries would utilize to stabilize their own economies. And here we see that now suddenly there's a gap, and gold came in very quickly. And even before then, it was always considered to be in the top five currencies or top five means of trading globally. We know now it took second place, and it took the euro off that second place perch, and is now second to the dollar, the most traded currency on the planet.
Yeah, and it's also interesting, we're talking about BRICS and them wanting to form their own currency, etc., etc. But if I recall correctly, I just briefly glanced at the article, but I saw somewhere that Russia is now demanding for payment for their oil in Chinese yuan. So it's there. I think maybe we are looking at a bit more of a serious movement right now of creating that BRICS currency, of creating a monetary system that is not reliant on the US dollar. And I think the US needs to be quite worried if that happens.
Well, more so, and as you're saying this, I'm thinking the current administration are not, their foreign policy hasn't been one of open-handed and let's be friends. It's been quite hostile. You see the whole thing with the tariffs across the board, and then countries that had power, like China, said no, and the US said, "Oh, okay, well then we'll let's renegotiate." The smaller countries, typically your emerging economies, which we are one, we've been on tooth and nail. Like we haven't updated a goer. Is it going to happen? What we're going to do? And we're in a position that beggars can't be choosers. But your strong economies like China have pretty much said no. So it highlights another thing for me, and again, it plays into this instability that globally, if the dollar is taken down and be no longer the reserve currency, is that's also going to lead to more geopolitical tension, and if not war, because this is where we are. And what does that mean? It means that the need or demand for gold to be a safe haven asset becomes even that much more.
Definitely. And I think one of the big things here is the fact that China has almost a monopoly on rare earth materials. Um, I mean, this is basically what this new tariff war between China and US is about. Is China produces rare earth magnets, etc., etc. There's a whole list of materials or minerals that China has an abundance of that they basically ship to the rest of the world that the USA does not have. And I think the whole sort of technological landscape of the world has changed to the point where these are becoming more important throughout the world. And, if China has that, they basically have the say. And now US is realizing, but we are reliant on that. And China is saying, yes, you are reliant on this. So we hold the cards now. It's one of the administration's favorite sayings. You don't have the cards,
Yes.
and China is basically telling them you don't have the cards. So yeah, now we're seeing 100% tariffs on China, and well, we're waiting to see what China does in response if that goes through. But I think it's just the way the technological landscape has changed, and China has been at the forefront of this.
Yeah, you look at how China over the last 50 plus years, where it was from an economy to where it is now, where its growth has been, where it's a complete opposite from the US. They had peaked in the probably the mid 60s, where they were dominant. They were producing their own automotive sector was massive. They were a manufacturing economy, and now they're not. And China has replaced a lot of that. And we've spoken at length about this, where the US is trying to pull back some of that. And what's interesting, I was actually having a discussion with someone yesterday, and we've had that discussion where you can't fix that overnight. It's a long play, and it's going to take time to re-establish those industries within the US.
Definitely, and this is the thing. If the US isn't willing to play with the other boys in the schoolyard, because they're not the big boy anymore. There's other big boys around now as well. You know, if they're not willing to play along with the other big boys, then there is going to be tension. There is going to be a demand for a safe haven, because it's going to be damaging in the long term to everybody involved. These trade wars, these escalations, it's going to be damaging to the economies involved. Now, you've got China, which famously said, "We don't care." I love that clip, by the way, because they're asking question. He just goes, "We don't care." But yeah, so that's the thing is, China says we've got nothing to lose. US is trying its old tactics of, but we're the big boys.
Intimidation, yeah.
Yeah, intimidation. And I think they're realizing it's a different landscape, and we can see that in the way that the currency is devaluating.
And again, this does lean towards some escalation in global conflict, slash war. And if that happens again, it favors gold, and gold will remain where it is, and its growth will not just remain in the current trajectory, but it would probably go more parabolic. We could see it shooting to 6,000, to 8,000, 10,000, and in a very short period of time.
Definitely, it well, as we can see, it's definitely not done yet. I think we're going to see 4,100 probably before the end of this week.
Yeah, I mean, now we talk end of year because we are now officially into the final quarter of the year. Um, sure. To even think of projecting where it will be currently at the current growth rate, we could see us finishing the year at around $5,000 an ounce.
Well, I'm not going to say no, that's a bit high anymore, because I've learned my lesson.
Exactly.
But yeah, I mean, I don't know. I don't know what's possible anymore. I would have said about 4,200, but as you said, these numbers given by the outliers of previous estimations that we always used to laugh at seems to be a lot more plausible now.
Well, again, like I said, if we look at the fundamentals and we see that geopolitically there's still lots of tension. We see economically there's lots of tension. We've mentioned the China-US trade war that's really now starting to take traction. These are factors that are not going to go away. And if not, they're going to only increase. And that speaks to gold continuing. As we said, it broke 4,000, a little pullback under 4,000, and bloop, straight back up, and now towards short of $20 to 4,000.
Definitely.
4,100.
Yeah, $4,100. I mean, that's coming soon.
Yeah.
And yeah, and then we look at silver. I mean, it's broken $50 an ounce.
And how long have we been speaking about this? Again, I smile, and I think I had a conversation with someone in April at a birthday dinner, and at the time they kind of like were baiting me, like, oh, we've heard silver, this big talk about silver, and this and that, and I said at the time that I do believe that silver will, the demand, and we've seen the cycle for the last 20, nearly 3 years, 36 months. I mean, where silver was continually growing upward, and the pullbacks were smaller jumps than before. So there was this rewinding and this coiling in. So we could see that it was heading there. We always said it was a matter of time where it would happen. We've seen the demand versus the supply has outstripped the supply. So we knew that the prices would break that 50. Did we think it would happen now? I kind of thought, and I think we do need to go back to our previous projections at the beginning of this year, but I think we spoke highly of around $40, that it would go into that mark and probably into the early 40s and some stabilizing there. But again, it leans to all this uncertainty.
Yeah, and as you said, production is one of the key things here. We just spoke about how the technological landscape across the world has changed. We're looking at electric vehicles. We're looking at all of those type of things, and all of these demand silver, solar panels. Basically, almost all of the green technology relies heavily on silver. And once again, this is the world we're moving into, and that demand is growing. In fact, I think one of Maloney's articles recently said that for every, or the demand that happens in 6 minutes for silver, the industrial demand for silver in 6 minutes takes 9 minutes to mine. So there's this issue that they literally can't keep up with production. We've been looking at a deficit in silver production for the past 5 years. I mean, and that demand just keeps growing, keeps growing. We see solar demand growing all the time. We see solar power generation climbing and climbing, and the demand is just completely outstripping the supply. And once that happens, there has to be a market correction, you know. Um, and I think that's the start of what we're seeing now. We're looking at $51. I can't remember exactly. I can quickly look it up. We're looking at $51.43 an ounce of silver, and that is absolutely insane.
Again, it speaks to, as you mentioned, the growth in the photovoltaic market, the solar panels, that has continued. And again, it speaks to the need for newer or different power generation versus traditional. And solar has shown to be quite reliable. I mean, we've got a sun that rises and sets and is across the planet and is there. It's always made sense. And I think that you can see it is being accessed across the board throughout the world. But where I think the biggest demand, and we've always said this, is in the developing world. You see within China that the demand for solar panels, in India the demand for solar panels, across Africa and the South Americas is all where the demand is heading.
And also, the electric vehicle market is a big one because if you look at China, the growth in electric vehicles has been absolutely astounding. And that is spreading to the rest of the world because they are exporting electric vehicles, which are actually affordable. I mean, if we go back 2, 3 years, if you wanted to buy an EV, you were looking at R1 million. Easy.
Yeah.
Before even starting to look around or shop around, and there was like one or two models available.
And there were maybe three or four charge stations here or there, and the infrastructure just was not there, or which would have made it realistic to actually utilize.
But now you see BYD coming in with cars for electric vehicles for roughly 400,000. So instead of, having to simply say it's out of my reach, you can now say, okay, I'm looking at a sort of just above entry level sedan or SUV crossover or something like that. Do I get the EV or do I get a petrol engine? And it's become a very viable option. The infrastructure has also grown. There are charging stations much more readily available than I think we are aware of because we don't drive electric cars. So obviously we don't know where they are. But I
Yeah.
think if we actually had to go and look, we'd be surprised at how plentiful they are.
And also, I think your hybrids have been quite a big growth market for the EV sector, where they self-charge and they utilize the fuel, but your fuel consumption is a lot less. That you're utilizing both. And again, as you talk of infrastructure, that infrastructure has grown considerably, and that's across the globe. Hence, there's going to be a greater need for silver because it's utilized in all electrical conductivity installations, all those kind of things favor silver and its growth.
Definitely, that combined with the deficit is why we're seeing 51, probably very soon $52 an ounce of silver.
Well, again, I mean, you look at the growth, it hit the $50 mark. Traditionally, what we've known silver, and we likened it to an ADHD child, whereas gold was your traditional marathon runner, long and slow, and that build up, its dips were far lessened. And silver, we changed its profile, like we said, about 36 months ago, where it started to have those rallies, but the drops were not as vicious or as harsh. And suddenly the build-ups were to that next level and to that next level. And the fact that we are sitting around 51.40 right now for silver speaks of it heading towards 55. And again, like you spoke of with gold, it's that $4,000 mark. 50 has always been the mark where we know it's a psychological barrier, and we know that once it's broken, and I always said this, the movement towards 60, 70 to 100 would be lessened in a time within that time scale.
Definitely. It's interesting times for all around. I mean, platinum, we are looking at the highest it's been in many, many years. It has been an absolute rocket ride the past few months. I mean, we're sitting at $1,648 per ounce of platinum at the moment.
Yeah, and again, we're talking from its all-time high of just short of 2,300.
Yeah, I think it was around 290, around
Yeah.
about there. Yeah.
And that's 2008. Of course, it had that massive crash where originally it was the main supplier, platinum was the main supplier into the autocat market, but there was a shift from platinum to palladium. And of course, the oversupply of platinum caused that crash. Again, it's taken its time, it's grown, but this year it's also been one of the top performers.
Definitely. And I think what's also contributed there is once again the political landscape. Because as you know, South Africa produces the most platinum in the world, Russia produces the most palladium. So everybody using palladium is sort of a distaste for things coming out of Russia. So if the two are more or less interchangeable, they're going to sort of have to adapt certain things in the processes of making it and the like and whatever. I don't know. I'm not an engineer, but it is possible to replace all of those things with platinum instead of palladium. And the reason why they originally went for palladium was because it was much cheaper. We were talking about $2,280 for an ounce of platinum, while at that stage palladium was much, much cheaper. And then, well, when the demand for palladium went up, so did the price. And that's something we see across the board every single time. Demand goes up, supply becomes constrained, the price goes up. And I think that's also one of the things that has contributed to this comeback that platinum is seeing is, if I'm correct, palladium has lost quite a bit of ground on its market value, but we're seeing platinum rushing in to take its place, and that's why we're seeing the growth. Demand is growing, which means the price is going to grow.
Interesting enough, I mean, palladium sitting around 1,440 odd dollars an ounce. I mean, it has also grown with this current commodity boom. But again, as you mentioned, there's a lot more favoring platinum's growth. We also know with hydrogen, as far as the catalyst converting hydrogen gas into electricity, platinum's properties still cannot be met. And so it has a very strong case to be utilized within the growth of the hydrogen sector, which I still foresee as one of the bigger growing sectors within the EV sector. Well, not in just electric vehicles, but across most electrical applications. Is hydrogen has a very strong case. We've spoken about the difference between it and batteries, power to weight ratios, all of that kind of thing, recharge times, and hydrogen is definitely a more superior fuel source.
Especially when it comes to heavy freight vehicles.
Yeah.
Like, I mean, we're even talking about cargo ships.
Yeah.
Japan has got cargo ships running on hydrogen. You can have your trucks running on hydrogen. And as you said, the weight of the batteries is the big issue when it comes to cargo vehicles like trucks. The more weight you add to it, the less you can haul, and it defeats the purpose of the thing. So, we've seen Tesla toying with electric trucks and this, that, and the next, but I think in that case, hydrogen is just the superior fuel source.
Yeah, and again, it's a definite growth sector in the green economy, and we do foresee that there's still a lot more growth on platinum. It's interesting. We've spoken all three of the precious metals on up. I mean, we've even mentioned palladium today, that is also on an upward growth curve. But what I found quite interesting is even within the traditional financial sector, where we currently busy with a few companies, and I'm talking about big hedge funds, where they're wanting exposure into gold and they're wanting exposure into precious metals, where they want to start limiting that. And it speaks to what we spoke about in the last episode, the Morgan Stanley, where they traditionally had 60/40, 60 equity and 40 bonds, and now that's changed to 60/20/20 and a 20% allocation in gold. We know what Ray Dalio has spoken about gold. He owns the biggest hedge fund in the world. And again, he's saying you got to have exposure into gold of between 50 to 20% of your total portfolio.
And I think the other thing is, it's one of our longest running studies is comparing something like a retirement annuity to gold.
So let's look at that, because again, let's just give a bit of background to listeners that haven't heard the story. It is my own RA. I took it out, it must be about 16 years ago or there.
2009 was when we started this.
Yes. So again, and it's an RA retirement annuity. So on a monthly basis, a premium is debited off my account. Originally, I think the amount must have been around 1,000 rand at the time, or maybe about 800 rand. It's grown to, what's the current contribution? I think it's about 1,600 or 1,800.
Yeah, I'll give that to you in a second. It's 7058.
Yeah. So again, that's been the monthly. So what we did is the growth of the retirement annuity, and another thing, it's with one of the biggest financial institutions in South Africa. So it is fully accredited with all the right bells and whistles. Of course, when I took out the retirement annuity, they said it's going to grow at this percentage per annum, and by the end of it, when I choose to retire, it will have X value. It has underperformed. And just a bit of back history is when the rand really took quite a hammering to gold, to the dollar, it actually was running at a negative. In other words, it was running at a complete loss when we converted this RA into dollars. And then, of course, it kind of broke even at a stage, and now we're into this new territory of its value. But this is the thing, is if we had taken those same monthly premiums that I would pay into, or they're debited off my account, and we bought physical gold, and it's very clear here, part of the study is we said physical gold, so we applied a premium onto it. So it's not spot price, it's spot plus, because we knew that we wanted to compare it as realistically as possible. So over to you.
Okay, so well, let's start with the basic. What have you paid? So that comes to, according to the calculations we've run, it comes to 216,577 rands. And if we convert that to dollars, we're looking at, now remember this we took the amount, we converted it into dollars on the day of each premium, so we used the rand dollar exchange rate at that time. And we did the same with the gold. It was on the day that you paid that premium, we converted that amount of money that was paid into actual physical bullion with that 5% premium added onto it. So anyway, what you've paid in so far is 16,217 US dollars. And currently we're looking at a value of 347,629 rands, which converts into $19,684. Now, if we look at that, the performance of this RA in terms of South African rands, you're looking at about a 60.5% increase over what you've paid in, which comes around to probably, where is that? It's 2.73% compound annual growth rate.
2.7.
2.7, yes.
On CAGR. So if we had to apply a CAGR to this, which is compound annual growth rate, it is 2.7. So it's quite a bit of a stretch to what they promised. And of course, there's always asterisk there saying, this is dependent on markets, and which are volatile and fluctuate and blah, 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 which we know. Now, what's interesting is you speak of a rand during that period of time, which weakened quite badly. I mean, at one stage we were close to to 19 rand to the dollar. If I think we actually broke 19 at the time, and then but we remained in the high 18s for a large period of time when there was negative rand versus dollar growth in the RA.
Yeah, I'm just looking here quickly. 2023 October, it was over 19 rand to the dollar.
Yeah. So what's interesting now is so the current value, if we talk rand, so I've paid in 216 odd thousand rand, give or take a few hundred rand here and there, and it now has a value of 300 and just short of 350,000 rand.
Yeah, so as I said, basically a 60% growth on that.
Over how many years?
Oh goodness, I think this started in 2009. So it's a good couple, 16 years, I think.
Yes. So again, this is the kicker. If I'd gone on a monthly basis, same premium, so the same amount of money being taken off my account, and I bought physical gold. Like we said, we added a premium because to buy physical gold, you need to buy it in a medallion. There's minting fees, there's costs of the actual physical product. What would I have now?
Well, let's start with the exciting news. You would have 305 grams of gold, which translates to 9.78 ounces. And at its current value, or at least the value on the last update that we did, which was $4,047 an ounce, you would be sitting with 699,451 Rand worth of gold.
That's insane. So we just short of 700,000 rand.
Just short, that is a 222.9% increase and a compound annual growth rate of 6.63%.
So more than literally three times the KGAR that the traditional RA would that is currently giving me. And my gold investments under the same investments over the same period of time. So it's the same 216,000 rand used, but to purchase physical gold is now giving me a return of just short of 700,000 rand.
And the other thing that we keep talking about is, South Africa is South Africa. You know, one little thing here or there could throw our economy in serious jeopardy. The rand could go absolutely belly up. And so what we always look at is we compare it to US dollars, which is more stable. Even now it's more stable, it's more reliable. And if we look at that, then we were talking earlier about your RA being worth 19,600 US dollars at the
$684,
moment.
yeah.
However, your gold would be worth $39,600.
So again, I mean, just short of $40,000 of value.
And if we look at it that way, if we look at the performance is, as you correctly said, we can see the US dollar is in a bit of a tight spot
It's
at the
under a lot
moment
of pressure, yeah.
because this is the second time that we've actually updated it that there's been a positive in the performance on US dollars, and it's a 21.3% positive this time. It used to be negative for, I would say, 15 years. It was running negative.
And again, let's be very clear here. The strength of the rand is not based on our fundamentals as a South African economy, but more the weakening and loss of the dollar's strength.
Definitely. But I mean, even considering that, the performance of gold would have given you a 144% increase, while the RA retirement annuity gave you 21. That's 0.95% compound annual growth rate versus 4.77% compound annual growth rate on those two. And I think, I mean, there's not much more to say on that.
It's phenomenal, and again, it's an interesting case study that we've utilized throughout the years, and it speaks for itself. Just to recap, an investment of 216,000 rand in a traditional RA would give me 300 just short of 50,000 rand. Same investment purchasing gold over the same period of time would give me just short of 700,000 rand. That's more than double.
And I think the nice thing about having a study that's run this long, that's been running for 16 odd years, is the fact that there's been its highs and lows. So it's not like we cherry picking from the good times. I mean, right now it is good times for gold, but it's not that we're cherry picking just the good times. The good and the bad is all in there over the past 16 years, all of it. So
But again, and that's the important thing is we're talking about something like all market related products or vehicles is they fluctuate. And like I said in my introduction about the RA, there's a little asterisk saying that these projections are based on market volatility, which they cannot guarantee, and we know that.
it's understandable. I mean, as we said, if you can guarantee that you would be the richest man in the world 10 times over, Elon Musk would be a pauper next to you. If I knew exactly what every market, every commodity is going to do for the next 30 years, I would be absolutely rolling in it.
Yeah, and again, I think we'll definitely keep revisiting this. I think what we before the end of the year we'll do another revisit just to kind of see. And at the current growth rates, who knows? When we do look at this in say December, will we be talking about a gold at four and a half thousand, $5,000 an ounce?
It's interesting. Place your bets, ladies and gents.
Okay, it's been marked and noted.
So yeah, so let's just take a look because we were talking about the fact that the South African rand at any moment, given something happening, I don't know what, but something can happen.
Well, let's be very clear here. Something is going to happen. We've got a very weak rand. We've got a very poor performing economy. Our growth rate right now is under 1%. Then we also look at the fundamentals of our economy. Our revenue is our expenditure far exceeds our revenue. We got a narrowing tax base. There are issues. Again, we also know that from a government perspective, spoke about the US having quite an aggressive foreign policy, and they are trying to change the internal growth of the country. Yet South Africa, we're not getting things right. We look at it, municipalities, we look at power outages, water outages, the condition of our roads, the condition of our municipalities, the fact that government is still the biggest provider of jobs in this country, and yet that can't last forever. What I'm really leaning towards here is at some point we are going to be staring a sovereign default in the face.
And what happens during sovereign default? Basically, it means that the country can't pay its debtors.
Yeah.
And we've actually, as I think our second longest running study is on Argentina, who suffered a sovereign default in I can't remember
June
exactly
of
when.
2020.
2020. I couldn't remember the month, but yeah.
Yes.
So in 2020 they had their sovereign default, and what we've done is we started in January 2020, and then we see how that currency has performed against the US dollar and how gold would have performed in the same scenario. So, well, let's take a look now. I updated this at the same time that I updated your RA case study. So it's 4 or 5 days ago, not that long. But
4 or 5 days in gold right now is it could be a lifetime.
you're actually right there. But
But for the means of explanation, and I think that's important, is it is it's pretty accurate to where we are right now.
very much so. And if we take a look now, let's start in 2020, 1st of January, Argentinians woke up and the currency was sitting at $59 or 59.76 to the US dollar. So
Yeah.
59 Argentinian pesos and 76 cents would buy a US dollar. So we said, okay, you woke up this morning, you're a millionaire. I've got a million Argentinian peso and I'm going to buy US dollars.
Well, we got two choices here. So remember, we're going to either hold our million pesos in an Argentinian bank, or we're going to decide should we buy gold, or how are we going to preserve that million pesos, or make sure this is pre a sovereign default. So it's 6 months before the default happened. So that's the case study. So how do we look at it?
All right, so let's convert those Argentinian pesos into US dollars. That gives you $16,733.60.
A million pesos.
1 million pesos.
Okay.
And that buys you 11,03 ounces of gold.
Which is the kicker here in this whole story.
So basically what we've done is we've taken that million pesos, we've converted into gold, we've got two baselines to work from, and now we fast forward to the 8th of October 2025, where an Argentinian peso in the post sovereign default world cost you 1,429 pesos. Sorry, the American dollar cost you that. And now here's another thing we need to note right now is that the administration, the US administration, is actively trying to stimulate the Argentinian economy at the moment. They've been pumping in money. They've been really been active working to get this economy ticking again. And this is actually down from its previous highs, if I'm correct.
Yeah, it was over 1,000 pesos to the dollar.
Well, it's
1,500 pesos.
1,500, yes.
Yeah.
So this is after the US government has intervened and is helping to rebuild this economy. So it's still sitting at 1,429.74 pesos to the dollar. And if we take that same million pesos, now let's say you don't trust the government, you don't trust banks, and like let's face it, many people do. You kept that in a safe in your home somewhere. You've got the cash in hand.
So you got a million pesos sitting in a safe. Okay. So what would that value, what's the real value of that right now?
$699.
So from 16 odd $1,000, a million pesos was worth. It's now worth $619.
699. Let's call it $700.
$700, give or take $1 here or there. That is insane. So a million pesos, where it actually, and let's rephrase that million pesos in January of 2020 bought 11 ounces of gold, over 11 ounces of gold. What would a million pesos right now buy you in gold?
0.17 ounces of gold.
Okay, so I think now we need to, we've laid the foundation of the story. So now, this is the thing. What would those 11 ounces of gold be worth now?
Well, on the day that we did this, which is of course the 8th of October, those 11 ounces would be worth 44,638 US dollars, which translated to 63 million Argentinian peso. 63.8, so just shy of 64.
So this is a classic case of wealth preservation in actual real, it's an awesome case study. So I remember when we spoke and that million pesos or the 11 ounces was about 6 million worth versus the million, that original investment. And that was still phenomenal. Now you're talking 63,000 pesos for that same value.
63 million.
63 million pesos.
And it just illustrates how far and how quickly a currency can go uphill, you know.
And let's be clear here, that's from June of 2020 when the currency completely started to run away.
Pretty much. I mean, if we look at it, it's worth 4.18% of its original value. It's worth 1.5% of the value of gold.
Again, we talk about the South African economy and our own clients. And of course, I always get updates from specific clients saying, oh, it's grown by X. We've had clients that have doubled the growth since 2021 to now in their bullion purchase, where they've purchased gold, silver, and platinum in different forms and different amounts, but where their portfolios have literally doubled in that space of time.
And I mean, I repeated this exercise, of course, in South African Rand, and then just to add some spice in Nigeria Naira, you know, because Nigeria is one of the biggest economies, if not the biggest economy in Africa.
Yes.
And, you know, we've seen similar sort of tales all over. Now, the thing to remember is that Argentina had the sovereign default. South Africa has not, and I don't think Nigeria has.
No.
And the shocking thing is that Nigeria has gone a very similar route without the help of that sovereign default. If we look at 1st of January 2020, we're looking at 360 naira to the US dollar. If we're looking now, it's 1,470. And we did the same thing, same exercise, except this time I think it was 1 million as well. And so essentially what it comes down to is the current value of the gold in naira would be 10,875 naira versus, the 680 US dollars that million naira is now worth. And, we're seeing it's held its value a little bit better, but it was a bit weaker to start with. It held it at around about 25. It's worth 25.5% of what it originally was, but it's only worth 9% of what the gold is worth.
And what would the value so how many ounces on that original million naira would you have got?
Oh, it was sitting at 360, so you would have got 1,83 ounces of gold.
Okay. And that's value right now?
It's 7,398 US dollars or 10,875 million naira.
Yeah. So again, it's grown in tenfold.
But the most important thing is your gold has preserved its value.
Yes.
You can go to another country, you can go somewhere else, and that gold is still worth what that gold is worth. Same story. If we had the naira under our bed and we took it out and we went to the exchange, we'd get a lot less.
Well, you pretty much could use it as toilet paper because its value has just completely diminished over this short period of time.
And I mean, it's interesting because a lot of the Nigerian population is actually holding on to dollars, physical dollar bills. So it's not a big stretch to say I've put it under my bed and kept it there as an investment, because they're doing the same, yes, with US dollars, but that's exactly what they're doing. So let's turn our eyes a little bit more south. Let's look at South Africa. Same story.
And again, what's clear here, this is the same understanding of the same period of time, talking about a rand that weakened to over 19 rand to the dollar. The dollar weakened and the rand strengthened and sitting around, as I said, 1740 to the dollar. So paint that story now.
So it's quite funny because we were talking about the price of a kilo of gold earlier, and we were saying it's like over 2 million rands
Well,
now.
it's 2.2 million rand.
Yeah. And here's the funny thing. Back in January 2020, it was 14 rand to the US dollar, and we lost our minds because look how expensive it is. Gold was, I can't remember exactly what the gold price was back then, but you could have bought yourself 47 ounces of gold with 1 million rand.
Sure. Bring those days back, I say.
So your 1 million rand back then was worth 71,500 US dollars, give or take a few dollars. And today that gold is worth $190,000, which comes out to 3.267 million rands.
So your million rand investment into gold has grown to 3.6 million rand.
3.26.
Yeah, 3.26 million rand over this period of time, where we've seen the rand lose value and then gain value against the dollar. But as I painted earlier, that our story and our economy and where we are going is not over. We got a lot of issues that are kind of being buffered by a very weak dollar. When the fundamentals do come to roost and that starts to really open up, we will see the rand tumble.
Well, there's two things at play here. Firstly, it's the devaluation of the currency. Secondly, it's the
Growth in gold.
escalation
Yeah.
of the gold price. Because if you were to go today and swap your rands, your million rand for dollars, you'd have 58,200 dollars,
Yeah.
which would buy you 14 ounces of gold. So that's where the kicker comes in, is the gold price has really, really come up while our currency has devalued.
Yeah.
So now 14 versus 47, and that's in the space of just over 5.5, or around about 5.5 years.
It's insane. And again, I think we've highlighted a number of different scenarios where these are real case studies, and showing that the that talk and that discussion of wealth being put into physical bullion, physical gold, has a very strong case and a very strong reason and cause for someone to consider it as part of their wealth strategy.
And here's the thing, your million rand today would have 81.49% the value of your million rand in 2020. So almost 20% value has been lost through nothing.
Yeah.
There's been no sovereign default, there's been no major financial occurrence
Yeah.
during that time. It's
So what you're saying is when that does happen, it will escalate even further.
That's just pure erosion and
Yeah.
you know currency devaluation. And if we look at gold, your million rand, or the money you spent on gold, is now worth only 30% of what it would have been if you had bought gold with that million rands. So that's the thing, is we've seen a great increase in the price of gold. We've seen, in our case, in South Africa, a little bit less of an erosion of the actual value of the currency. But as we've demonstrated, there is the possibility for that.
Sure, Willem, this has been quite an interesting podcast. I mean, we can continue to carry on and on. But just in closing, any final thoughts?
Well, I think it's going to be a very interesting end to the year, and I actually look forward to, just going back, seeing what our original thoughts were and where we are. And I think it'll be very interesting and illuminating to actually just see where it's gone this year.
As and in closing from my side, we are busy with a number of different projects continentally, and there's definite interest in hedge funds and companies of that stature looking into gold as a possible alternative to clients, also to their currency devaluations. As I mentioned, not just South Africa. Interesting enough, I've seen a massive uptake in sales with silver and platinum into Europe, where there's a big interest in it, because I know that silver, for instance, is you cannot get silver in the UK, you cannot get it in Europe, and even in the US, that is running at such a premium right now. And again, platinum. If you go and see any of your major producers of coins, sovereign coins like the Perth Mint and the Royal Mint and so on, go and see that you'll notice that platinum coins are either sold out or not available. So that again speaks to that demand that people are coming in and buying up silver, gold, and platinum.
Definitely. I mean, it's right now, as we said, it's still in the sort of not quite stealth, but the awareness phase,
Very
and
much
it's
so.
it's rapidly moving towards the mania phase.
And what's unnerving is we've hit these highs already before it really starts to take shape and take root.
That is quite unnerving.
Yeah, just also, Willem, if any viewer did like this podcast,
If you enjoyed it, hit the like button. If you want to see more, be sure to subscribe, and we'll see you guys in the next one.
take care. Bye bye.